Hello everyone, this is Shinichiro Kasai, licensed real estate agent in Japan. Today, I would like to talk about the Japan office market in April 2026. Right now, soaring construction costs and inflation are forcing big structural shifts in Japanese real estate strategy. Today, I will explain what is happening and how we should react. So let's get this started. First, let's look at the background. The Japanese economy is facing strong macroeconomic pressures. We have tension in the Middle East, rising oil prices, and high inflation. Also, our GDP growth is slowing down, and unemployment rate worsened to 2.7% in March 2026. Because of this single economic shock, the Japanese office market is dividing into three different paradigms: Tokyo, Osaka, and regional hubs. Vacancy rates by city. Please look at this chart. This shows the average vacancy rates by city in April 2026. As you can see, the situation is very different depending on the location. Tokyo is very tight at 2.20%. Osaka is 3.09%. But if you look at the regional cities like Fukuoka, Sendai, and Yokohama, the vacancy rates are much higher, between 4% and 6%. This means we cannot use the same strategy for all cities. Tokyo market. Let's look at Tokyo market first. Tokyo has severe supply shortage. The vacancy rate is only 2.20%. Because of this, the average rent has increased for 27 months in a row. It is now 22,454 yen per tsubo. For tenants, the cost of relocation is too high right now because of peak rents and the surging material prices. Therefore, many companies are canceling their relocation plans. Instead, they choose stay and upgrade strategy. They stay in their current office and spend money to renovate it. For building owners in Tokyo, new development is difficult now. So the most important strategy is to maintain the competitive power of their existing buildings. Osaka market. Next is Osaka. Osaka is showing a different trend from Tokyo. The office demand is very solid. The vacancy rate has declined for 4 consecutive months, and the rent has increased for 14 months. In Osaka, companies are actively moving to better offices to get an advantage in hiring and to improve employee communication. Also, we are seeing a new circular economy model in Osaka. It is a retain and lease model. In the past, when companies moved out of their own buildings, they sold the old building and it was rebuilt into apartments. But now, companies keep their old building, renovate it, and rent it out to the market. This creates a new revenue stream and adds much needed space to the market. Regional hubs. Now let's move to regional hubs like Sapporo, Nagoya, and Fukuoka. These cities are having massive localized supply waves. For example, in Fukuoka, the Tenjin Big Bang redevelopment policy is pumping many large buildings into the market. Because of this, the local vacancy rate in the Tenjin area spiked to 7.15%. Nagoya is observing the demand well around Nagoya Station, but Sapporo's vacancy rate is increased to 3.9%. When there is a high supply, tenants become very selective. We call this a flight to quality. Properties with modern facilities successfully get tenants, but older buildings with inferior conditions are left with empty rooms. We call this the legacy penalty. Older assets must execute costly renewal investments or they have to cut rents. Strategy for owners. So how should we adapt to this market? For asset owners, here is the playbook. If you are in Tokyo, your focus is protect. You should prioritize tenant retention and invest in your existing building to keep it competitive. If you are in Osaka, your focus is Innovate. You should identify all the corporate-owned buildings and use a retain and lease model. If you are in regional hubs like Fukuoka, your focus is invest. You must upgrade your facilities early to avoid the legacy penalty and rent cuts. Strategy for tenants. For tenants, you need to assess your capital. Does the strategic value of moving outweigh the high costs? If no, like in Tokyo, you should negotiate lease extensions and renovate your current office. If yes, like in Osaka, you should execute relocations to improve hiring. And if you are operating in high vacancy regional hubs like Fukuoka, you should take advantage of the supply wave. You can negotiate for premium facilities at competitive terms. Conclusion. In conclusion, the macroeconomic headwinds in 2026 are the same across Japan, but the solutions are entirely local. To survive and win in this market, we need agile execution, precise investment, and a deep understanding of each local city. Thank you for watching my video, YouTube. And if you think it is interesting, please press good button and please register your favorite. Thank you very much and see you soon.